This is Cesare Fracassi. I am an associate professor of finance at the McCombs School of Business. I'm also the director of the blockchain initiative at Texas McCombs. And today we have here with us Amin Shams. He is a PhD student in finance and an expert on cryptocurrency. Amin and John Griffin, also a professor of finance and faculty advisor for the blockchain initiative. They just released a new paper called Is Bitcoin Untethered? And Amin is here today to talk about this. So before we talk about the paper is going to talk about the relationship between Tether and Bitcoin. Everybody nowadays knows what Bitcoin is, but not many people know what Tether is. So can you first tell us what Tether is?
Yes, Tether is a digital currency pegged to US dollar, which has both the stability of a fiat currency and also the flexibility of a digital currency. And the idea behind Tether is interesting as a facilitator of demand from investors who own fiat currencies, but it could also be harmful to the market if it's overprinted, and because it can create an inflationary effect, like the effect of overprinting money, which can push the price of Bitcoin and other cryptocurrencies up.
So so who owns Tether?
Tether is issued by Tether Limited, which has a lot of ties with Bitfinex, which is a major cryptocurrency exchange.
And so you said that they have a pegged value between one tether US tether and $1.
Yes.
Who checks that they actually have a one-to-one back between US dollar and tethers?
So it's we don't actually see many evidence of that backing. So there was a couple of bank statements issued in early 2017, but after that there's a lack of reliable accounting statements on whether Tether is backed by dollar or not.
So we don't know if there is a one-to-one back.
We don't know.
We just have to trust them.
We have to trust them.
Which is interesting because the whole idea of blockchain technology is to create a system where trust is not needed, and where everything is checked and double checked by a set of network nodes. But now here we actually have to trust that Tether actually is backed one-to-one with US dollars.
Yes.
That's interesting. So let's start talking about your paper. So what do you find in your paper?
We are interested in studying the price run-up of Bitcoin in 2017. And we studied the transactions on Bitcoin and Tether blockchain, and we find transactions with very specific patterns that seem to influence price of Bitcoin and other cryptocurrencies. For example, we see that these transactions induce an asymmetric serial correlation in Bitcoin prices. Whenever Bitcoin prices go down, we see that it's followed by a very sizable price reversal, but only when prices go down and only after, during the time that Tether is actively printed.
So Tether prints money and the price of Bitcoin goes up?
Not exactly like that. We actually we are interested to find the exact time that Tether is exchanged for Bitcoin. That's why we analyze Bitcoin and Tether blockchain, and we match these two blockchains, and we can show when Tether goes and Bitcoin goes back at the same time. So at the time of these exact transactions, we can see that there's a price effect, which is usually following printing Tether, but not exactly at the same time.
I see. So you basically find evidence suggestive manipulation of Bitcoin prices.
We find evidence consistent with price influences. For example, we see that around round number price thresholds of Bitcoin, we see activities consistent with creating a price support. So if you have an incentive for the prices to not go too low, you want to create a price support at certain thresholds that people use for price anchoring. One of them could be the round number price thresholds, and we see a significant support there. And the effect is very large at the aggregate level. If we remove less than 1% of hours following large activities of like this, the buy and hold return of Bitcoin from March 2017 to March 2018 goes down to half.
So the value of Bitcoin should be less than half than what it is today?
It's very hard to talk about the counterfactual, what the price should be, because we don't know when prices are pushed up, whether so prices went up to $20,000 and now prices are $6,000. Whether price is corrected or not, we don't know. And given that there is no clear fundamental in the market and there's no cash flow and we don't have a good model of pricing Bitcoin, I can't tell whether the price should be like half today or not.
I see. Is Tether still printing Tether coins?
Tether was actively printing up to late January 2018.
Which was the peak of the price.
The peak of the price was in December. But they issued a lot up to December, but they kept issuing also a lot more until January. But then after that, like, the market cap of Tether was 2.3 billion by the end of January, I guess 2.2 or 2.3 billion. After that, it went up by like 200 million.
So why they stop?
I'm not sure. It could be related to a subpoena issued by CFTC. Like there was a public announcement of CFTC subpoena by the end, around the end of January, and it could be a coincidence or they just stopped printing Tether after.
And it's interesting that when they stopped printing Tether, the price of Bitcoin collapsed all the way down to $6,000 today.
Yes.
It's an interesting correlation.
It's interesting correlation, yes.
So when did you release the paper?
We released it yesterday, June 13th.
Okay, so what happened to the price of Bitcoin when you this is a paper that actually got a lot of visibility in the news. It was commented in the Wall Street Journal, New York Times, and many outlets. What happened to the price of Bitcoin on that day?
Price went down by almost 4%, I think.
So 4%, the market value of Bitcoin is about $100 billion. So you're basically responsible of wiping off $4 billion of wealth from crypto investors.
So first of all, it's hard to tell because prices fluctuate a lot. And whether it was because of releasing our paper or there was other reasons or there was selling pressure in the market, it's hard to tell. But I think in general, our paper or other research of this type could be very beneficial to the market in the long run, because investors need to trust the market, and for the market to grow naturally, it needs integrity. So this kind of research and an open discussion about these issues, I think, could be very beneficial for the market and for crypto investors in the long run.
Okay. So thank you so much, Amin, and we are looking forward to also see your next paper on Bitcoin.
Thank you. Thanks for having me.